Are we actually in a bull market? Is this crazy rally going to continue, or we're expecting a huge drop down? Well, if you want to know more, stay tuned in this video. We're going to talk about next week analysis and everything what's going on in the world. Hello everyone and welcome back. My name is Dan, and as always I'm bringing you the best weekly analysis of the stock market and crypto market and related news to all of that. I'm giving you tips and tricks on what you should follow, how you should predict and analyze the market to benefit you, right? To make some money. So as always, without further ado, we hop into the charts and we're gonna start with Nasdaq 100 weekly chart. Okay guys, again, as always, a lot of lines, right? You don't see anything from these lines. But these lines are actually in accordance with the LGBTQ month, right? I'm just joking, those are just some random colors that I chose. Okay guys, so what we see in Nasdaq is this crazy rally, right? We spoke about it previously. If you haven't watched my previous videos, make sure to see a couple of weeks back at least to see the full picture of, because I'm usually just connecting the dots every single week. I'm just adding up on my previous thoughts. So you need to follow these weekly videos constantly to be updated with my thoughts and my perception of the market. Now, let's go hit the charts. So, what happened? I said that we're going to have a smaller pullback to the downside, and I said that we're going to go to 14,600 at least. That did not happen, guys. We didn't even make it that far. We made it only up to what is it, 14,900, whatever, something like that. So no, actually we went a little bit lower. Let me just see. We ended up at 14,870 or so. Anyways, we did not reach even our first target. We did not retest this previous resistance properly and make it as a support. We just barely made it a little bit lower than 15,000. So we jumped back up, and we jumped back up with a reason. Of course, as always, we had some good news on GDP. GDP showed very big strength in the US economy, and we had a really good PC report, okay, so which is showing up that the inflation is cooling down. Also, now next week I'm gonna talk about it later, which kind of reports are we going to have. But guys, as I already told you, as you can see by the chart, what I want to see and what the reality is, let me just zoom in on the 1 day. So what I want to see and what actually reality is are two different things, right? As I said, personally would like to see a double top here, then pull back here, then again another pullback to at least somewhere at around this 14,200 area. So this would be my target, right? But as I've mentioned it just now, what I want to see and what the market does is totally two different things. So most probably the market will do whatever it wants to do. And now it's turning this previous resistance into a support. You see this blue line, this was our previous resistance, now it's turned into a support. So the market, it easily do something like this, pull back just like 100 points or so, maybe even less than that, just to continue rallying back up to reach 15,600. And guys, let me just zoom in one more time. Zoom out, sorry. I don't see the reason why we shouldn't be coming to 15,700 or so. Now, with all these news and everything what's happening, like, to be honest, with this kind of strength, now I don't even see the reason why we shouldn't. Like, I had so many reasons why we should not, but we just going like a straight arrow, like a straight line. It's a huge parabolic move, and definitely a big correction is going to follow up. But now the question is when. Now you're all asking me, when is gonna correction happen? You predicted it 25 times so far, so one time you're gonna be right? So I don't know, guys. Honestly, I don't know when the bigger correction is going to happen. To me, the chart still looks very bullish. Look at this. We erased all our losses from the previous week. Boom, straight back up to the to retest the previous highs. Now, I already told you, I do expect maybe one more fake pump, and I expect a double top to form. So in the next week, I would love to see continuation of the bullish move. Maybe break this area over here just to pick up some liquidity, and then finally a bigger correction to 14,700 and then 14,200 at least, okay? Now, maybe it's not gonna happen next week, but like I would like to see it within the next 2 weeks or so. So guys, at the moment, the market is not listening to those predictions. The market now, what it wants to do, as it seems, it wants to retest this over here, make it into a support, and go up to 14,700 area. We're gonna be watching markets closely. So what I would suggest you to do in the next week, let me just zoom in on 4 hours. So I would suggest you to have a look at this area, 15,400 to 15,000, let's say around 500 area, right? So see what the market is going to do. If the market retests this area over here and then goes continue higher, watch out what is it going to do at the previous highs, okay, in this yellow box. If we break it and then go back right down and then retest this area, that to me means that we're going to form a double top and we're gonna be trapping so many longs in this area. What do I mean by that? Well, retail traders, of course, when they see a sign of bullishness like this one, they just want to press buy. So when all of them, when they press buy and when we reach this area and when we don't make to break it, okay, what the institutional traders are going to do, they're going to use retail traders as exit liquidity, and they're gonna start dumping their bags onto the retail traders, and we're gonna just keep going lower and lower and lower and end up somewhere at around, I don't know, 14,200, as I already told you. So don't be exit liquidity. I spoke about it in the last videos. Don't be exit liquidity, just wait. Look at the market, look what's it going to do in this area of 15,500. If it breaks it with force and vigor and then makes it into a support just to continue all the way up, then it's just clear that we should long it from this area. But if it just goes to this area, barely go above it, then just close down and go all the way down back to this resistance area, or support actually in this scenario, that means that we are going to be creating double top and heading lower. So as a recap on Nasdaq 100, let me just zoom in on a weekly chart. I want to show you something interesting. On a weekly chart, I have to add one more line, I'm really sorry. We do have, what do you see over here? Let me just do it like this. What do you see over here in this area? It is a hidden bearish divergence on both MACD and RSI. Okay guys, hidden bearish divergence on a weekly chart. Okay, that means that we are expecting a bearish move from here. Like really, I do expect a big bearish move to come up from here, and as I already told you, I'm quite sure, I just don't know what the catalyst will be, but I'm quite sure we're gonna do something like boop, go back to 14,200 minimum, maybe even higher, lower, sorry, but a minimum 14,200. So what I will do in the next week is I'm going to follow Nasdaq, as I already told you, and you should do the same thing. So I will be following Nasdaq, what it wants to do around this area. Does it want to break out with momentum and force and some good news, or we're just barely touching this area and come back all the way down? So I will be just watching. Also, if we start dumping here in the area of 15,260, if we dump immediately and don't hold this area and go back right over here, that to me also will mean that the bearish momentum has started and we're gonna cool down a little bit. Okay, so to recap on Nasdaq, follow these two areas of 15,500 and 15,250, see how this will hold, and below that, if we go back to 15,000 area right over here, that means that the bigger correction will most probably follow up. Now let's move on to Bitcoin. Bitcoin, again, a lot of lines, right? I know, but guys, what did I tell you in the previous video? We did the move that we did in the previous video, so we followed up with the same move like we did in the last time. However, we had some bad news coming from SEC. As always, they never bring us good news, and I'm going to talk about it later. And Bitcoin just retraced a little bit. If it wasn't for the bad news that we had with Bitcoin and ETF and spot ETF funds and the SEC, we would be breaking out this area, as I already told you, of 32K, and we would be heading way higher. Now, with all this being said, and again, I'm going to talk about it later, so stay tuned throughout the entire video, we had some bad news, but they were not really actually bad news. They were like, you know, just a correction that needs to be made in the filings for these Bitcoin spot ETFs. So I do believe that the momentum for Bitcoin will follow and that we're gonna break above, retest this previous resistance that's gonna turn into a support, and I really do see Bitcoin ending up at $40,000. I really think this is the next move. Honestly, I do not see us going lower with this momentum. The worst case scenario that could happen would be maybe something like a crab move, right? Like accumulation in this area, and then finally some good news, and again to go to 40k. But I really do think, and I'm really convinced, as I already told you, that 40k is imminent with all these new news, right? So I changed my mind. I was saying that I do expect some bigger correction around 21k, but how we held this 25k really strong, that means that we only got power left in Bitcoin. Bitcoin, I would start accumulating in this area if you want to accumulate somewhere around here, so between 31 and 29. Okay, so you can accumulate this area right over here before the next big leg up. All right, now guys, with that, all that being said, let's move on to some news for next week. Now we're gonna start as always with economic calendar. Economic calendar, Monday we have United States Independence Day early close, because on Tuesday we have United States Independence Day and the market is going to be closed. On Monday we do have actually ISM manufacturing PMI, which is going to be a super important report. Pay attention to it. As always, you want to see it better than 47.2. Now on Tuesday the market, as we just said, is going to be closed for Independence Day. On Wednesday we do have FOMC meeting minutes, okay, which could potentially be a turning point for the indexes. Maybe they're gonna finally crash them into a correction, maybe, because in the FOMC meeting minutes the Fed are going to give us full details on what they spoke about in the last meeting. And as we had Chair Powell talk last week, they actually said that they're expecting 2 more rate hikes, and the economy is too strong, labor market is too strong. They really expect economy to cool down a bit and labor market to cool down a bit before they stop raising interest rates. So this might trigger the avalanche of shorting into the market, but let's see. Now on Thursday we do have ADP non-farm employment change, initial jobless claims, services PMI, ISM non-manufacturing PMI, jobs job opening. Like, there's so many reports on Thursday. Thursday is like a data dump in regards to jobs data. So you need to pay attention to these jobs data, because they're gonna tell us how jobs are actually holding up, labor market, how is it holding up. If it's stronger, that I don't even know how to interpret it anymore, because nowadays all the news can be interpreted both ways, right? In good and bad. But I don't know how the market wants to interpret it. In reality, for the Fed, if the labor market is still strong, that would mean more rate hikes and bigger tightening to come, which is in turn bad for the stock market. Stock market should be going down. So if all these job reports are still way better and stronger, actually, as per Fed thinking and reasoning, the market should be going down. I mean, the big companies should start reorganizing and selling their stocks. But we're gonna see, of course. You don't even know in these crazy times how the market's gonna react. It just reacts randomly, you know. Now on Friday we have average hourly earnings, and then we have non-farm payrolls, private non-farm payrolls, participation rate, and unemployment rate, which is going to be very important. So basically next week reports are all related to job and labor market. If labor market remains very strong, that means that the Fed will keep tightening and increasing rate hikes, okay, which in turn should cause some finally breakdown of the stock market, and finally they should just, you know, start selling a bit. But maybe if they, you know, like GDP report last week, they took it so positively, the market started just pumping again, right? So let's see, we wait and see. I told you already the strategy: wait, do not rush, be patient, and then we're gonna see how the market will react. Let's move on to some stock market news. PIMCO CIO, Chief Investment Officer, says preparing for harder landing for global economy, said to Financial Times. Now, Pacific Investment Manager, PIMCO, basically they're one of the bigger players in the industry. They're one of the bigger asset companies, firms, hedge funds, whatever you want to call them. They have, I think, 2-3 trillion assets under management. So they are one of the big players. And they say that they're preparing for harder landing, while top central bank chiefs prepare to continue their campaign of interest rate rises. Chief investment officer at the US bond giant told the Financial Times in an interview published on Sunday. the more tightening that people feel motivated to do, the more uncertainty around these lags and the greater risk to more extreme economic outlooks. Ivaskin told the FT, noting that, I highlighted this part, when rates have risen in the past, a lag of 5 or 6 quarters for the impact to be felt has been the norm, okay? The market is too confident in the quality of central bank's decision, he told Financial Times. Basically, what he says here is that the market was lagging behind all these hikes, interest rate hikes, as we see now. We are now at the highest interest rate hike since 2001, okay, since the dot-com bubble. And we are now almost back at all-time highs. So the market totally priced in all these rate hikes and now is confidently preparing for the rate cuts. But as per history, and as per this guy over here, the chief investment officer, he said lag of 5 or 6 quarters for the impact to be felt has been the norm. So maybe next year only we're going to feel impact of these tightenings and impact of these rate hikes, okay? So let's see. I do believe, as I already told you, that we're still not in the bull market. I mean, technically, yes, we are, but I said that I don't like the beginning of this bull market because it's just been overstretched. What I'm fearing is this, that somewhere, let's say beginning of next year or mid next year, when the investors are the most confident, we're gonna have a huge crash down. Something will crack somewhere and we're just gonna just break down. And that would be very bad because next year we should be literally in the middle of the bull market already. That's why I don't like the beginning of this bull market. It started out really aggressive, really aggressive, without any corrections. I don't want to see that. I want to see correction as soon as possible. So somewhere, let's say next year, we are mid of the year, we're already in the middle of the bull market. But of course, as always, markets don't listen what I want, what you want, what anybody else wants. Market does whatever the market wants to do. So we just follow. Now guys, earnings calendar starts mid-July, okay? Earnings report, all right? So bigger companies start reporting somewhere, let's say around 13. I didn't even look previous to these because these are not big ones. So PepsiCo, Delta, whatever, they started 13 and then 14 onwards. These big banks, BlackRock, they all start giving their quarterly earning reports. These earnings reports are actually expected to be very bad. The narrative has always been that when the earnings reports are expected to be super bad, if they show that they're not that bad, they're still bad, but not that bad, market always take that crazy positive and continues going up. So if this happens on these earning reports, we saw it in the previous quarters, if the if the companies actually report decent or okay earnings report, the market will continue the bullish momentum. And just let me continue, go back on the chart on Nasdaq. So on a weekly chart, this is the thing somewhere mid-July that actually can keep us the bullish momentum, okay? This is the only thing that I see in the near term that can keep us the bullish momentum is the earnings report. If the earning reports are decent or okay, the market will definitely take them positively, right? Because now we are expecting some disastrous reports, okay? But if the reports are actually disastrous, then brace yourselves, we're going to see a big correction, all right? So somewhere mid-July, earnings calendar. Now let's move on to some Bitcoin and some crypto market news. US SEC deems spot Bitcoin ETF filings as inadequate. When this report came out, let me go to Bitcoin chart real quick. When this report came out, we had, let's just put 3 hours, okay, this huge red candle, right? We went from 31K to 21,500. This big red candle actually happened because the SEC said Bitcoin ETF filings are inadequate, okay? Now, this looked very bad, but why? Let me go back again on the chart. Why did we did this recovery? We did this recovery and now we're preparing to blast off to the upside. Why? Well, simply because actually they only said filings are not sufficiently clear and comprehensive. And they also said they would have a surveillance sharing agreement or provided sufficient information about details of those surveillance agreements. So basically they want them to name a spot Bitcoin exchange which they would have be using for this surveillance sharing agreement. So all of these guys, they didn't name an exchange that they will be holding as a surveillance sharing agreement with, whatever it goes. I'm not really technical about these things, but it's just something that you can you can tweak and you can add, right? They return the files back to them. Now all these asset managers, they just tweak them, reformulate them, find the exchange that they want to use as a surveillance sharing agreement, whatever, and then they just return it back to the SEC, resubmit it basically, right? So they're not denied yet, they're not declined, it's just they need to provide more information. Fidelity immediately went with Coinbase. They chose Coinbase, right? But since SEC is suing Coinbase, we're gonna see what's gonna happen. We're gonna see what's gonna happen. Will they actually approve it or not? I do believe that maybe BlackRock. Now let's just quickly go back. EDX is the exchange that was created a couple of weeks back, before all these filings have done. This is the Matrix attack. This is the Matrix organization. Conveniently, Citadel, one of the biggest asset managers as well, creates this EDX crypto exchange together with I don't know whom, whatever. They create this EDX exchange just before everybody have filed for Bitcoin ETF. And then now they got rejected because they don't have a Bitcoin exchange which they would have a surveillance sharing agreement with. So what I presume is, because BlackRock, Citadel, all these big guys, they'll work together, right? What they will do, Fidelity goes with Coinbase, BlackRock will most probably choose this EDX, guys. Maybe not, maybe they're just brand new, maybe that's why not, but nobody will choose Binance US. Definitely, they're also being sued. Maybe they will go with Kraken or whatever. I don't know, but you see how the dots actually add up. They conveniently created a new exchange, blasted Binance, started the war with Binance and Coinbase, and now they need somebody to be their intermediate for the Bitcoin exchange surveillance sharing agreement. Okay. Oh, we have this new exchange, EDX, backed up by Citadel, our friends. Oh, we could use them. You know, it's all planned, it's all organized. That's the bottom line. Okay. The bottom line is they are organizing all these kind of things. So I don't think this is bearish for Bitcoin ETFs. On the contrary, this will be sorted out. This is just a minor setback. And I think the market will blast in the next couple of weeks, okay? Crypto market. So to recap everything, we do have a bullish case for stocks still, okay? Because we don't have enough bad news happening. We had good reports. We had good things happening in the market. But also, we are too overextended and we're just waiting for the first big news, bad news that happened to break down. And we do need to break down at least 1,000, 2,000 points. Honestly, we do need to flush, okay, all this crazy AI hype to continue a bull market in a normal manner, okay? Now, on the crypto market, we do have Bitcoin ETFs still being not approved, in advocate filings, blah, blah, blah. But once all these things are sorted out, and once the big investors start piling their money back into Bitcoin, I do believe 40,000 is going to happen, boom, overnight. And then from 40, it's going to happen the same thing as it happened between 25 and 30. We're just going to consolidate for a bit, month, 2, 3, 4, 5, whatever, you know, for some time between 35 and 40. Maybe with some big bad news, we're going to go back to 30 just to go back to 40. Who knows? I don't know. And from that on, 120K is imminent on Bitcoin. Anyways, guys, I went too far. Thank you so much for watching, and I will see you in the next week episode. Peace.